Good morning. My name is Ryan Littlestone from forexflow.live. This morning we're going to see whether we get a continuation of last week's risk rally. Something we've been going on about for the last few weeks here, looking for the reopening, the effects that's having on markets, the effect that's having on the economies. Last week we saw some of the PMIs coming in, showing signs of a bounce. It's a little bit tough to find exactly what's going on. When you go from everything virtually being at zero to some activity, that's going to cause a big jump in the PMIs because that's the way they're modelled and that's the way they work. But the market has taken that as positivity that things are getting back to normal. We still yet to see that confirmation. We want to see it in the hard data. If you go back and look at all the PMIs that we got last week, although the headline number jumped, if you look at the comments and the notes that people like Market put in afterwards, the underlying comments and notes are not as positive as the headline numbers suggested when they bounced. So from that perspective, we've got to keep a look at the hard data, see how that's affecting as reopening happens. But it hasn't stopped the market, and this is something that we've been looking for, that the market is getting in front of this. It's saying, yep, things are getting back to normal, economies are reopening, things are getting better, and we're seeing rallies in these risk pairs. We're seeing the yen sold off, we're seeing the Swissy sold off, and that's lifting up the other pairs, core pairs like sterling and the euro. Now, last week we looked at sterling. This was one of my charts I was looking at the daily chart today. Last week I mentioned that as we were looking at this risk rally, we've also got the Brexit factor coming back into play. Now that's really taken a back seat. Last week we had the presser from Barnier and comments from Frost after the last round of negotiations. Again, we're at loggerheads, a stalemate, and we pretty much got a can kick by Barnier saying that October is going to be the crunch point. Everyone was looking at June because that's when potentially the UK had the period to announce any extension to the transition period, which the UK is still insisting it's not going to do. But Barnier then shifted things and said, well, October is going to be the crunch time. That's when the most heated negotiations are going to take place. So really that's booted the market and booted the can over to October. But that's still going to factor in because we're still going to have these negotiations as we're going along. Now, as I say, the Brexit factor hasn't really played a part in this, in the pound trade. I was thinking we were going to see tops forming in the pound, especially against the dollar. That hasn't happened. The pound has just literally run away, the same as every other pair. So again, looking at the daily chart, we can see that we caved up through some levels. We got through up through the 200-day moving average. That was a fairly concise level. We had a double top up there through March. We've broken all the way up, busted up through the fib levels, the 61.8 fib of the last year's swing lower, all the way down to that volatility low. So the levels are being broken, and when you've got a view on a market that a pair or company is going to be affected by something, but the price is telling you something different, you've got to reassess what you're looking at. So as much as I was looking for the pound to take a negative tone with Brexit coming up, it hasn't happened. So what do? Well, we look at the wider edges of the ranges that we've seen in play. We're up here towards a big level, as you can see on the chart here, again, the daily chart. I've marked a red line there, horizontal line, the 127.70 area. That's a big historical level. It's had a big say in this movement and the pairs on both sides support resistance. So this is a key level. This is one of those levels you look at if we have got a trend change, if we are going to make some moves. These are the sorts of levels we're going to look at. So that's my focus for now. I'm a little bit neutral on trading it, but we trade the levels in front of us. And as always, I wish you well this week.